Hey everybody, Brian Shannon here from alphatrends.net. Today's Friday, October 3rd, 2014, and we had quite a volatile week for equities. The S&P 500 this week lost about 0.75%. NASDAQ down 2/3%. Russell 2000 continues to underperform, although month to date, that is just the last couple days, it has performed better here. And now gold is down year to date as well. So a lot of trends still out there, and the intermediate term trends are what we want to stay focused on. So let's do just that. The S&P 500, of course, is in a major uptrend on the weekly time frame. There's still no arguing that. We've still got all these moving averages which are rising. But this week we saw that the pullback became a little bit deeper. It was, or it should not have really come as a surprise, as we were below that declining 5-day moving average the entire week. Not below it the entire week, but we had a declining 5-day moving average. And what we're looking for is a pattern of higher highs and higher lows above a flat to rising 5-day moving average before we get intermediate term bullish. And right now, as we know, we've lost some key levels of support. We've got this pattern of lower highs and still of lower lows. So what we'd like to see next week would be a pullback down towards maybe even 195 and then create a higher low and then to go break higher from here. I think that would stop the selling and turn this market a little bit more neutral, but you have to look at it a little bit more cautiously again because we are below that 50-day moving average also. Now, it doesn't mean the death of the market, of course, because we saw that we were below that 50-day moving average for a few days back here, but the important thing to stay focused on is the intermediate term trend. If you look at right here, this was about August 11th, and on August 11th, if we go back to this 65-minute time frame, that's where we saw the pattern of higher highs and higher lows above a flat to rising 5-day moving average emerge. So we're not there yet. Certainly there were some good day trades or even 2-day trades if you're nimble enough to get involved, but I prefer to see a pullback, do a little bit of healing and digestion of these gains of the last 2 days, and then see where we can go from there. The NASDAQ broke an important level this week as well, and then we saw a nice recovery here the last 2 days. So we saw what seemed like a little bit of a panicky type of selling action that brought us down close to the 100-day moving average in the NASDAQ. And here we see on a 30-minute time frame, we've still got this pattern here. We've still got the lower highs and we've got these lower lows in here. So, we had a decent day, 2 days, but from those lows. But again, in here, I'd like to see a pullback, perhaps down towards 97.5 or so, and then to turn sideways a little bit. This market is in need of some healing right now, and a lot of stocks have been hurt really badly, and really have very low expectations for them coming back. I'll talk about some of those here shortly, but I think it's important to study some of these stocks that have gotten destroyed and to learn from them and learn to recognize the signs that they're pointing towards in the stocks that you're looking at. I had posted on StockTwits a chart of the, and on alphatrends.net, a chart of the Russell 2000. This is the weekly, and we've had this band of support, basically 107 to about 108. And you can look at this as a left shoulder here, a head, another head, and a right shoulder. Yes, head and shoulders patterns can have double heads. The point is, though, what I to the post was that the market had just dropped 9.2%, and it's foolish to be the person who sells after a 9.2% decline. So some people, of course, sold and sold short as the market made new lows for the year. However, you look at this market and say, again, where has it come from? Where did it have the potential to go before it was likely to find some demand? And it just came down 9.2% right into this prior important level. Now, I'm certainly not bullish on the Russell 2000, but I think if we can get it to rally up towards 112.5 to 113-ish, then we're going to start to monitor this thing for the potential of a short sale. So if we get a bounce and then it starts to break down, the next time it could be the fatal one for this Russell 2000. So still very cautious on the Russell 2000. 100,000. We had a decent bounce back, but for tomorrow, let's keep an eye on really about 108.5. I think if we can stay above 108.5, then this market has a chance to maybe show some more signs of stability. Semiconductors broke an important level as well and stayed below it at 50.5. That had been the bottom end of that range that we were talking about and where the 50-day moving average was. It broke down hard through there, and this market, the semiconductors that is, did finish with a loss of 2.25% this week. So these guys have been the strongest performer this year, but obviously this month they're not doing very well, and we're below a declining 5-day moving average, so there's no reason to be looking for a place to purchase the semiconductors on balance in there. The financials broke down and recovered a little bit in here, so we had seen that this prior band of resistance did not in fact hold a support, but we're back above it, and we're above that 50-day moving average. So it seems as though, you know, from that failed breakout 2 weeks ago, we did see our fast move lower with the lower highs and lower lows, and now if we can pull back, and really what I'd like to see here would be for it to hold 23.05 to 23.15. If it can hold above that next week, it says pull back, pull down a little bit, and then break this level, well then we've got what looks like a left shoulder, a head, and a right shoulder. So I'm a little bit, I think these are a little bit more constructive, but I'd like to see the pullback and hold above 23.05 and then to buy some strength next week in the financials. We saw gold down at new lows for the year, and now again negative year to date. So this market, as I've been saying, if they don't scare you out on the way down, they'll typically wear you out, and there's really no signs that this is even the bottom. If you look at silver and the way that it's behaved, you know, it kind of had this same type of look of support to it, but with these lower highs coming down and putting pressure on it, and silver has broken this descending triangle. Now when we look at gold, we see kind of the same type of pattern. So there's no reason to be a buyer of gold. Maybe we get a bounce somewhere in here, but you know, we're still below a declining 5-day moving average, and as long as that 5-day moving average is declining, then the intermediate term trend remains guilty till proven innocent. And speaking of that, bonds 2 weeks ago, we spoke about how the intermediate term trend was turning higher, and that shorts should no longer be looked at as long as we're above a rising 5-day moving average. And the 20-year bonds here have been climbing this 5-day moving average with just a real nice pattern of higher highs and higher lows. So if you're involved, I'd say a stop probably goes about 116.75-ish or so, but a nice bounce back in the bonds over the last couple weeks. And what else was I going to talk about? I was going to talk about the IYR. This is the commercial real estate index that's gotten beat up pretty badly here the last month, and no signs of a bounce in there yet. If you look at the 30-minute time frame, maybe you get a bounce above this level next week, above 69.75, but the primary trend here is lower. You know, if you get a bounce, I would think that the best case would be up towards about $70.5, $71 a share. And then you've got the oil service, which is getting crushed as well. Oil service closing right down near its lows and really, you know, showing a horrible decline the last few weeks. So again, these are the types of stocks you want to, indexes that you want to study, stocks like the 3D stocks you want to study, and think about, you know, the stories that we've been told in these names. XONE, which is down at all-time lows after having, you know, huge rallies in here. Stocks like PEIX that are just getting hit hard. They were in beautiful uptrends. Then the sentiment switches, and this stock has just been murdered, as it has been WPRT. This is alternative energy. So there's a lot of damage out there. Apple still really just kind of neutral overall. In here we see that we continue to ride this little trend line band of support in here, basically near that 50-day moving average. On a 30-minute time frame, just a whole bunch of nothing going on in here unless you're looking for day trades. And then you've got BABA, which is still obviously in a downtrend. If we look at the 30-minute time frame, we do have lower highs, we do have lower lows, and if we look at the volume weighted average price since the IPO, that's this level right here, it's up at about $91.70. So on average, the participants in the aftermarket are down by still a few dollars. So there's no advantage to being long Alibaba. I think next week, maybe, if we start to see it come up towards this level, find some resistance and be constructive above that 5-day moving average, then perhaps it could go on to take out the volume weighted average price year to date, and then we could see that BABA could get going. But right now it's just not there. Twitter had a good week, so the people who were calling them a bunch of pot smokers and that they can't, that it's not a good company, listen to the message of the stock. It broke out again today and continues to behave well. The Ebola stocks, they're super volatile stocks and can be difficult to trade, but there's some really good moves in there as well. Stocks like TKMR, of course, which had a great week, and then Lake, which I think you keep this on your watch list for next week. Those two names, but overall, I think that this week we saw probably for now the end of the selling, the major selling. But if we break below these levels, 195 in the SPY next week, 97.50, 97 and a quarter to 97.50. If we break below these levels and hold below them, then I think we could see another round of selling. So maintain your vigilance and focus on risk management. We had some great trades in Alpha Trends this week, and we had some losers, but they were very small losers, and that's the focus each and every day in Alpha Trends. I hope it was a good week for you, and that next week is as well. Thanks for tuning in.